For an analysis on how all of this is affecting South Africa's economy, let's speak to Alan Mandel, Senior Precious Metals Analyst at HTDT Gold. He's joining us now from our NASDAQ studios in New York, and thanks so much for joining us, Alan. Before we get to gold, let me ask you... Thanks for having me. You bet. Let me ask you a question, about the economy more broadly. The government basically promised a couple of years ago to create 5 million jobs by 2020. President Jacob Zuma saying now that that's not going to happen, but he's blaming it on the world economy for not being able to reach that promise. But overall, before we get to the gold issue, how would you describe the current state of the economy there in South Africa?
It's untenable. The mine workers and others are dealing with inflation rates that are extraordinarily high, and there isn't enough job creation. So they have a long way to go, and also the global economy is influencing the way the debt structure is. So the gold mining is important, but the overall economy needs to grow its way out, considering inflation is so high.
Let's talk about
6.3%.
Yeah, let me talk a little bit about gold prices. They've been in a free fall. Some analysts say that gold is declining in importance. I want to get your read on that.
No, gold is very important. I mean, it's the only asset class that isn't somebody else's debt. So overall, gold should be an important part of one's portfolio. And the situations in the Mideast and in the debt countries, the debtor nations, most countries, GDP to debt to GDP ratios are 300 to 400%, and the United States, $2.2 trillion in debt that the Treasury has purchased. So gold has a good place in portfolios now. I don't think it's going down much.
Okay, let me ask you about its place in Africa's economy, because it's obviously key. It employs more than 100,000 workers. We've seen this gold strike end, but another may be beginning. How much can the economy withstand? And there were, of course, violent and long work stoppages last year. Are we likely to see any of that this year, you think?
I think that the gold miners are going to continue their unrest. The problem with the gold mining sector is technology also. The mines are so deep that the labor, in order to extract the more coarse ore that's in the greater depths, is dependent upon technology, and they don't need as many workers. And so this is going to have an influence on the economy overall. And the AMCU, which is resisting the labor offer, they had violence in their ranks last year. They're much more politically savvy this year, so that could ameliorate the situation, but it is very important.
What about if this slide continues and worker unrest continues? What do you see as the likely long-term impact on South Africa?
Well, the long-term impact is going to influence the mine production and the economy overall, but as far as gold prices are concerned, it's going to put pressure under prices because the output is going to be reduced. And South Africa depends a lot upon gold mining, and especially platinum. 70% of the world's platinum comes from South Africa. And if that's impacted, there could be repercussions globally.
And Alan, I want to ask you about the negotiations. The chief negotiator saying that not everyone's going to be crazy about this deal, but there was also in Guy Henderson's piece, the fact that there are such narrow margins for these people who run these mines. Are these increases in salary, are they sustainable?
Well, they're really having an impact on the bottom line for Ashanti, Harmony Gold. They're about $300 million, right? 2 billion rand increased that they lost from the strikes, and the increase in pay that they'll have to come up with in order to meet the miners' demands is going to continue to put a crimp on their profit.
Alan Mandel joining us from New York. Thanks so much for your analysis. Certainly appreciate it.